You are watching Market Watch, the brief overview of the key events from the world of finance. Who would have thought that when discussing inflation and even more so the prospect of changing the Fed's monetary policy, we would be talking about artificial intelligence? But incoming reports from the largest technology companies from the United States indicate that their success is largely due to the rapid development of AI. As a result, key stock indexes continue to grow, updating historical highs. For example, the S&P 500 index has reached an all-time high for the first time since January 2022. The growth of stocks indicates that investors believe in the stability and sustainability of the economy, which in turn contributes to the growth of inflation. Based on all of the above, we can say that the development and mass adoption of artificial intelligence is one of the factors keeping the U.S. economy from recession. For the same reason, we can say that it supports inflation, and as a result will allow the Federal Reserve to keep the key interest rate at the achieved level. As a result, we do not see sales of the US dollar in pairs with most currencies, and there are no obvious prerequisites for a change in the situation either. Therefore, only an unexpectedly strong decrease in inflation can undermine the strength of the US currency. As strange as it may sound, a decrease in inflation and the subsequent reduction in the Fed's key interest rate may be accompanied by a sell-off in the stock market. It is important to formulate correctly here, to be accompanied, not to provoke. After all, a decrease in inflation will occur only in the event of a significant slowdown in economic activity, which is also negative for the stock market. And only all this can force the Federal Reserve to ease monetary policy. And now let's move on to the cryptocurrency market, which has turned bright red. There may be many reasons, but first of all, we note the quite natural failure caused by the emergence of ETFs. Quite a lot of bitcoins were bought to create them, and now a significant part of the investment is directed not into Bitcoin itself, but into shares of exchange-traded funds, which is why there was a certain shortage of demand directly for Bitcoin itself. Also, the news that the United States, Great Britain and Australia have imposed sanctions against individuals and legal entities allegedly facilitating cryptocurrency transactions for Hamas has a negative impact. Any sanctions related to the cryptocurrency market have a negative impact on it. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.